Hello traders and good day to you all. We had a sound and visual check just a couple of minutes ago. It seems like everything is working in order. I can tell you that on my end everything is looking very nicely. We've got a lot of attendees on our session, and it's amazing to see how interested all of you are in our strategies. I'd like to say that with this software, the GoToMeeting software, you've got a chat box in the software that you can write questions during the webinar. So be my guest. If you have any question during the webinar, just type on the chat box and I'll be able to assist you on my end as well. This is practically our communication. So do the best to write everything down, and we'll be able to move forward with this webinar. I'd like to say another thing. If at any given point during this webinar we'll have a visual or a sound problem, please just tell me on the chat box, and then I'll be able to fix things on my end. I can see that still traders are joining the room. Welcome. We will have more traders joining the room. Unfortunately, we can't bring all of you at the same time, and we have only 5,000 spots on the webinar, and from time to time you'll see that you can't see on your end. I see on my end that traders are joining. But we will try to do our best. If at any point during this webinar you have difficulties, just talk to your brokers and we'll try to fix issues, or obviously have another sessions in the future so that you'll be able to enjoy the benefits of learning our strategies. This webinar specifically is going to focus on one of our strategies. It's the sequence strategy. It's a short-term trading strategy. I will explain the concept. The first stage will be explaining the strategy itself, and then I'll move forward and show you on my account how I'm trading based on this sequence strategy. So I do advise that on your end you'll write the details of the strategy. It's not so difficult, but once you understand the idea behind the idea of the sequence, the idea of probability, then you'll be able to understand how to apply that on the chart. Again, I will show you several examples of how I'm doing that on my platform, but again, if you have that right down, then it won't be a problem for you to apply that on your accounts as well. So let's actually begin. We know that for a fact every binary option trade has a 50-50% to win or lose a position without analyzing the market at all. Let's explain it. We have a potential to trade both directions on any position. Let's say, for example, the gold. I can take the gold for a call position or for a put position. Even if I'm not analyzing the market, at this point, when I'm opening the trade, I've got 50% to produce a profitable trade or 50% to lose that. And in this case, obviously, we understand that without conducting analysis, it all comes down to the idea of statistics. Trading 60-second cycle. Okay, trading 60-second cycle strategy, that is the sequence strategy. We will elevate the profit potential by applying a chart recognition strategy. So what we're going to do at the beginning, we're going to learn what is the idea behind this strategy, and after that we're going to add another perspective of actually analyzing the charts, and by that we'll be able to elevate the probability of a winning trade. Okay, so based on probability and a scheduled series, we can set the next rule. What do I mean by that? Based on probability, obviously the probability of a trade, and a scheduled series, meaning that we're not paying attention to a trade as an individual, but placing it in a sequence, meaning that it's a part of several items in a series. We can set the next rule. Being a part of a series, if we trade a call position with 50% profit potential, as we've described at the beginning, and we lost the trade, next time we trade a call position, we have 75% of winning the trade. And let's explain why. So a probability of a sequence goes like this. I know that for the first trade, I have 50% to lose that trade. the same as winning the trade without conducting analysis. If I wanna take the sequence, the series, into the idea of percentage of again probability, I can say that having two bad trades, two losing trades in a row, in order for me to do that, I need to produce a 25% of success rate, so-called success rate, losing two trades in a row, and so on and so forth. In terms of again the idea of calculation, if I have one losing trade, 50%. If I have two losing trades in a row, it's just doubling the 50%, and by that we can see that the percentage of losing the trade is dropping down. Again, I can see that traders are joining during this explanation. I'll go over that again. We explain the idea of a sequence, several items in a row, and what is the probability for me to produce a profitable trade or to lose a trade in a sequence in this case. So as you can see, losing one trade, we have 50% to lose that. Two trades in a row, to lose them, it's 25%, and so on and so forth. We can even get to 1, 2, 3, 4, 5, 6 items. It's already a very, very small percentage to reach that kind of a sequence, that kind of a series, when we've got 6 trades losing in a row. Now, what we're going to learn today is how to take this information and to make it our advantage. Now, if I'm taking this logic and I'm placing it on an actually trading sequence, it looks like this. So for the first item, I know that I've got 50% to produce a profitable trade and 50% to lose that trade. Let's say that I lost this trade. And over here, I'm explaining the concept of how we're moving forward or starting a new sequence. Let's go over that. So again, the first item can deliver 50% of profitable trade or 50% of a losing trade. If I lost the trade, I'm multiplying, and again, you don't have to do that every single time, just explaining the logic. I'm multiplying my loss by 50%, meaning that 50% for a losing trade times 50% equals 25%. So the next item that I've got, if I lost the first one, the next item will be 25% of losing the next trade as well, or 75, which is the leftover, 75% of winning the trade. So I've got a potential trade of 75%. Again, it's just the idea of probability. After that, we will move forward to actually chart recognition strategy, but that's just the basic of how the sequence strategy is calculated. So let's say that even this trade, I took one trade, I lost that. I took 2 trades, I lost 2 trades in a row. Okay, the third trade in that specific sequence will deliver 12.5% of losing it and 87.5% of profiting out of this specific position, and so on and so forth, moving on and on and on. Another thing that I'd like to explain is that at any given point, if we have a losing trade, we're moving forward with the sequence, and once we've got a profitable trade, we're moving backward to the first item. What do I mean by that? Let's say that I had 2 losing trades in a row, and the third trade was profitable. So I'm moving backward to the first item. Okay, I'm starting a new sequence. And it's important because the next thing that we're going to describe is the amounts. How we're actually doing that on the chart, what is of an average investment, the profit, and the profit potential out of an entire sequence. So let's go over that. Winning the first trade, the average percentage of profitable trade is 75%, meaning that if I took a trade on $10 investment and I won that trade, I won $7.5. So the gross profit is $7.5 as it is the first item of the sequence. And if I lost this trade, total loss of $10 at the moment. That is the first item. So again, let's take an example of losing the first trade. So I lost the first trade. Right now I'm on minus $10. Moving forward, and the next item, which has 75% to deliver a profitable trade and only 25% to deliver a losing trade, I will triple my investment to $30. Having $30 investment, 75% on $30 is 22.5. If I'm winning this trade, the second trade, then the gross profit is $12.5 because I lost $10 from the last trade, and right now I've got a clean $12.5 in my account. The reason why I'm talking about such small amounts is because I do advise that at the beginning you'll begin with low amounts to get the grasp of the strategy, to gain confidence, to understand how you define a directional movement, an uptrend or a downtrend. We will go over that when we will talk about the chart recognition in a second. But the important thing is to understand that as you triple your investment, you'll be able to enjoy the profit and a higher potential, a higher percentage of profiting out of this specific trade when you're looking at this cycle, this sequence, as a series of trades. So again, let's say that let's move forward to the last item. Let's say that we lost 1, 2, 3, 4 trades. Okay, the fifth trade is already on $1,000 investment because we've tripled our investment from $10 to $30 to $100 to $300 to $1,000. $1,000 investment, and that's a very difficult thing to achieve in terms of the sequence, to reach a level where you're losing so many trades in a row with high probability, and at last you can reach the higher level. And here I'd like to highlight the idea behind this strategy. You want to lose the small investments so that you'll be able to reach the higher figures and then make substantial profits on top of your investment. So $1,000 investment, that's a $1,000 trade on a specific trade. The profit, 75%, is $750. The gross profit is $310 because we're taking $750 minus $300 and $100 and $30 and $10, which we lost during this entire process, and the gross profit is $310. And again, if I'm losing this trade, it's a gross loss of $1,440, and I can move higher to the next trade to make additional profits on the account. Again, it's very difficult to reach that kind of level once you're accurate with your reaction to the market, and we will talk about that when I'll show you examples of how I'm actually trading on my account. But I'd like you to remember the concept. Trading in a sequence is a very, very good probability for us to produce a profitable trade, as the percentage of us to produce a profitable trade is climbing higher along the sequence. Okay, so I think that it's understood. Again, if you've got a question, just type on the chat box so that I'll be able to refer your question, but I think that it's very clear. Going over that again, just for guys that already just joined the room, we've looked at the first item. We've got 50% to produce a profitable trade, 50% to lose that. Our investment over here, the initial investment is $10. We've got 75% of profit on top of our investment, meaning that $10, that's $7.5 as profit. The gross profit over here is 7.5, and the gross loss is $10 if I lost the specific trade. And until the end, we can see that indeed, once I'm paying attention to the investment and I know the profit potential, and I remind you, we've got higher payout on positions. That's the average 75% on top of our investment. You can see that you can cover the loss by having a higher percentage of profitable trades, or the probability of a profitable trade, and carry several sequences in a row. And later on during this webinar, I will discuss a very important issue, the biggest question of how I know when I should stop trading a specific asset. We will get to that in a second. I've got a question on behalf of Michael. Michael is asking, so if you lose 6 times, the next investment will be $3,000. That's exactly right, Michael. It's very rare. Usually you'll get to a point where you will cover that investment with the profits that you'll make until you get to that kind of investment. But it is the preferable thing. But let's talk about it. $3,000 investment, 75%. We're talking about approximately $2,250 profit. I think that that is the figure. Minus 1,440. It's approximately, it's just a bit lower than $1,000 profit on that specific investment, $3,000, by having a higher probability on your investment being profitable out of that investment and covering the loss of the sequence that you've just had during this entire 6-item sequence. So let's move forward and actually talk about the chart recognition strategy. Until now, we've explained the idea of probability, how a sequence is working, why we've got higher probability to produce a profitable trade as we're losing trades in a row. And over here, what we're going to do is going to learn a very basic method of understanding the chart recognition strategy, how from a chart I can understand what is the preferable direction, and I can highlight the potential of producing a profitable trade. Just before we'll get to that, I'd like to say that when we open a sequence, when we decide to trade a sequence, the direction, we're not changing it ever, and obviously the asset, we're staying on the same asset for as long as it takes until, and again I'll explain that again, until we see that the potential on that specific asset has completed, until I understand that I need to move forward and look for another chart. And I'll explain that in a second again. Don't worry about it. I just want you to remember these two figures. First of all, do not change the direction. I see that traders, they do this reaction to the market. All of a sudden they lost 2 trades, so they try to manipulate the strategy and take the other direction. But the entire strategy is based on the assessment that by pointing toward the same direction, catching a specific movement in time, we will prevail. We will have profitable trade at the end of a sequence. And once I have that, I'm pointing back to the beginning of a sequence. I'm starting all over as if I haven't traded at all until now. So chart recognition strategy. The most common successful trading strategy is to follow a trend. I don't know if most of you are, we've got a lot of VIP traders in the room, so you're familiar with my lectures regarding the follow the trend. The trend is your friend is a very basic fact from the so-called turtle strategy back in the 80s. I don't know if you're familiar with that, but we had a group of traders that made a lot of profits very nicely, and their entire concept, they had money management process as well, but the entire concept was following the trend, defining the trend and following the trend. Although on our platform we're doing the same thing on small time frame, still we can keep with the same concept because we can see that it's working on our perspective as well. We know for a fact that a trend invites traders to join in as it highlights the potential to make quick profits. And here let's talk about traders on the other side of the world, of the screen. Traders, they look for a potential to make profit. If the market is climbing up, then they will look for a potential to join this uptrend, or if it's dropping down, they will look for a potential to join this downtrend. And in this case, they will cause an additional liquidity, additional confidence toward that direction. And that's exactly what we would like to surf on. I'm saying surf on because when we're referring to analyzing the market, usually we're referring it as waves, climbing or dropping or surfing with the waves. Chart recognition follows the same concept, highlighting the highest potential to produce a profitable trade. Let's move forward and see what it actually is. It's very easy to imply because it's very logical. So under the chart recognition concept, we have 3 ways to analyze the market. Analyzing the market, we have 3 main chart structures. The first one is a dominant uptrend. The second one is the dominant downtrend, and the third one is a sideways indecisive movement. Now, before we will see and touch this issue, I wanna sketch the idea of charts. What is the definition of an uptrend and what is a definition of a downtrend? So a definition of an uptrend is a continuance of, or let's say a dominant uptrend or a dominant downtrend. It's a continuance of a movement toward a specific direction, uptrend or a downtrend, with no overlapping structure. What do I mean by that? You can see that over here we've reached a top, we've dropped a bit lower, and over here we've got a bottom, and the next top that we've reached, okay, dropping back down again, we did not penetrate the last peak area. So this uptrend that we see on the chart, it did not define a change in direction as long as it did not penetrate the last peak structure. And again, the same thing goes for a downtrend, dominant downtrend movement. We had a downtrend, an uptrend, and a downtrend. And again, the uptrend did not penetrate the last bottom that we had in prior. And again, the same thing happens over here. We did not penetrate. On the contrary, let's say that we had a very nice uptrend. Right now the market is moving toward a higher and higher rate. And all of a sudden, we see that the market is penetrating the territory of the last peak. In this case, on one hand, this is a definition of a chart, a change in direction. Okay? So from this concept, we understand that at the moment, we will not open another sequence on this specific chart. Okay, let's say that we're talking about the gold. So the gold is climbing up very nicely at a specific point. Let's say that I decided I had several good sequence series over here. I took a trade over here and it went against me just a bit. Several items I've lost, and all of a sudden the market returned for the uptrend and I'm making profit. And all of a sudden I took a sequence at a specific point that where the market is starting to fall down again. I know for a fact that the market will have a specific period of a downtrend movement. At some point it will make a small connection. Over here I'll make a very large profit because, for example, we had 1 losing item, 2 losing items, 3 losing items, 4 losing items, and the 5th item that I'm taking, the market is moving toward my prediction, and over here I'm completing the sequence. That is it. I'm closing the chart of this specific asset, putting it aside and moving forward to another asset. Now again, I'll show you examples of that on the platform, but let's go back to the examples of the chart. Over here you can see very nicely that it's not just a sketch on the Paint software. It is a dominant uptrend and a dominant downtrend. You can see that over here we had a downtrend and an uptrend and a continuance of a downtrend. As long as I'm not penetrating this area over here, my perspective is that the market is still in a downtrend movement, and I will continue to trade, pulling the most profit that I can out of this movement. And if the market will change direction, I'm continuing trading the sequence until I'll have a profitable trade, and then I'm changing the asset. It's a very simple method, very logical method, but don't continue trading on assets like this if they break the last peak or bottom that we had in the past. Now, on the contrary, looking at dominant and uptrend or downtrend is very logical. Sideways, you can see that sideways it is an overlapping movement. It's overlapping its own structure, meaning that we don't have a definition for traders, not for us, for other traders, that the market is climbing up or dropping down, and therefore we should put it aside. And we might see the euro, in this case that's the euro in front of the pound, we might see the euro versus the pound starting to climb up or drop down at a specific point in the future, and then we can trade on that. But at the moment, It's just a fluctuation level. That's what we call that, an indecisive movement, and we shouldn't trade on that because the probability is it's equal to 50% and we want to catch higher probability for our trades. Now, how do we actually open trades based on this strategy? What we're going to do with this strategy, we're not going to take an hourly trades, daily trades. We're going to take very short-term trades so that we'll be able to sit down, have 1 hour a day or 1 hour a week that we know that we're going to invest in trading. Because it's not only trading, it's also gaining confidence and experience of using this system so that you'll be able to do that at any given point whenever you'd like. Now, usually on other strategies, I'm teaching our traders to look at the psychological aspect of traders, to analyze short-term and long-term charts, to look at liquidity. We don't need that using this strategy because this strategy is on short time frame, and we can even use small deviations, large time frames deviations, to actually trade on them with this concept. So trading order, how do I actually participate in a trade like that? The first thing that I'm doing, I'm opening the 60-second instrument on our platform. On our platform, you can see the instruments at the top, the regular binary, the pairs, the long-term investment, the 60-second. Over here, we're clicking on the 60-second. After that, based on the chart recognition strategy, find an asset in a dominant uptrend or a downtrend structure. So in this case, I've replaced several charts. I found the euro in front of the Australian dollar, and as you can see, indeed we've got a general uptrend movement, a very constant uptrend movement, very smooth, very clean. And look over here, for example, if I'm taking one trade over here and another trade over here and another trade over here, it's going against me, but I'm looking for an uptrend. Eventually the market is moving toward my prediction. And again, the same thing happened over here. So I've got over here 2 or 3 losing trades in a row, but again the market is correcting and moving forward and moving forward. That's the entire idea of the sequence, having this kind of confidence. And once you'll apply that several times, you'll see how comfortable and confident you're getting with this system. The third thing that we're going to do, again I remind you, we opened the 60-second instrument on our platform. We went forward and looked for an asset that has a potential for an uptrend or a downtrend, dominant one. And the next thing, we choose 60-second from the expiry selection. Over here you can see the expiries. We've got 1, 2, 3, 4, 5 expiries. Just pay attention that's on 60-second because sometimes you're changing it to 120 or 180, and just pay attention. Usually it's on 60 seconds. That's the base once you're opening the 60-second instrument. And obviously start a trading sequence. And in this section we need to ask ourselves, what is the sequence that we would like to start with? And again, as I said, I advise you to start with the basic, with $10. Because that will be the first item. You'll lose that one, you'll lose $30, you'll gain profit on top of a $100 investment, and then you'll start to get the idea. But again, I do not advise traders to start with high amounts because that might get you to the point where psychologically you're starting to interfere your own analysis. And over here, what we're going to do right now, we're going to move forward to the platform. I want to show you how I'm doing that. It's very easy, but there are very, very basic rules that we need to pay attention to along the way so that we'll be able to keep our account profitable. So this is my account. I assume that you see that in front of me. Let me check. Yeah, I can see that the visual is working. Again, if you've got an audio or visual problem, just describe that. So as I said, we're going to do 60-second instrument on our platform. From the 60-second instrument, the first thing that we need to do right now is to look for a dominant uptrend or a dominant downtrend. You can see very clearly, very nicely. Just for the concept that I've described at the moment, the gold is indeed in a very nice dominant uptrend, still continue its uptrend. We can look at the long-term chart, but it doesn't really matter. Right now we can see that the market went very nicely down since the beginning of this trading day, but for the past hour we've got a very clean uptrend, and the assessment based on that is that we will see additional uptrend on this chart. Now, just for the example, let's move forward and look for other assets. Right now I'm on commodities. Let's look at the entire asset list. So the gold is in a dominant uptrend. We've covered that up again. Let's see several more examples of that, the need to define an uptrend or a downtrend. Over here, it's a good example. We've got an uptrend on the Australian dollar in front of the US dollar since 45 minutes ago, but 30 minutes ago, approximately 30 minutes ago. But the thing is that we haven't had a consistent uptrend movement for the past hour. We need a long time frame so that other traders will notice this movement, and then we'll be able to join their reaction to the market. So on one hand, I've got an uptrend on for the past a bit more than half an hour, something like half an hour, but still it's not dominant long enough for me to trade on that. So I'm putting this asset aside. I'm not trading the Australian dollar versus the US dollar. You can see that the gold is still climbing up. We could have made a profit on top of that one already. Now let's move forward. I really want to go over several charts to show you and explain why they are good or not. In this case, the euro versus the Australian dollar, you can see very nicely that indeed we're in a constant downtrend movement. It's not a strong one, but still it fits our needs because it's dropping down. Okay, we can start a sequence. On this chart specifically, the euro versus the Australian dollar, we will have a better probability to produce a large amount of items before we will make profit. But again, the dominant downtrend is clear, and we can definitely trade on that for a put position. Let's look at the euro pound. The euro seems to be liquid at the moment. It seems like we had an announcement, if I'm not mistaken, an announcement on behalf of the on behalf of the pound. But we can see very clearly that we had a very nice downtrend, and all of a sudden, from 1205, the market is just fluctuating up and down, up and down. Now let's take an example. Let's say that I saw this downtrend movement, and indeed that was an amazing movement, and I decided to take a put position over here at the bottom. So I had one losing trade because the market went against me, two losing trades, and all of a sudden the market returns to the downtrend. And again, let's say that over here I took several trades, so the market went a bit against me, and then it's returning to the downtrend. So even if I'm getting into this very difficult trading consolidation area, still the market will produce a profitable trade from a specific sequence. In this case, it will have something like 3 or 4 items of losing in a row, and then we'll be able to make profit. But again, you can see very quickly that the market indeed is returning to the downtrend. Let's look at other assets. Euro versus Japanese yen is expected to deliver liquid as well, but not as much as we would like. Again, we can see very nice downtrend, but right now we're consolidating. It's not a continuance of a downtrend as you would like it to be. Euro versus the US dollar is a sideways indecisive movement. That's a very nice reflection of what not to trade. The market is dropping down significantly, climbing up significantly. The thing is that in this kind of movement, I can get caught with a wrong direction for a long period, and I don't want to do that. I want to have a short sequence items, so that I'll be able to actually do that with low capital invested on each and every trade. So that will be a no-go for the euro versus the US dollar. The next item, the pound versus Japanese yen. Again, the same thing, a very strong uptrend at a specific point in the past, and then we're getting into a consolidation area. It's very quick to define whether we can trade an asset or not. So let's just again move forward and go over the assets in a quicker manner. The pound, again, we had an announcement, I assume that approximately at 12. That caused a major burst in the strength of the pound, and you can see that right now it's just fluctuating. I remind you the pound right now is under the Brexit pressure. We had an initial downtrend movement on the pound, losing 10% of its value in the market, and just a couple of weeks ago we had additional 5% of a downtrend on behalf of the pound. Right now we've got a pullback. Just general information regarding the pound. Right now we've got a pullback on the pound. It's gaining a bit of strength in the market, but again, it won't be for long-term investments, not short-term investments. It won't be my definition for a good trading asset. So the dollar versus the Canadian dollar should be outside of this scale. You can see that it's just fluctuating sideways. And let's move forward and look for another asset. Dollar Japanese yen. Let's see what's going on over there. Okay, another sideways movement. So you can see that right now, when we're opening the charts and analyzing them, we don't have a lot of possibilities in the market, but that's okay because we only need one asset to follow. So let's go back to the gold. The gold seems to be a very solid uptrend movement. We know that generally the dollar is expressing weakness in the market as we approach the elections on Tuesday, and we had a non-change on interest rate yesterday on behalf of the FOMC. So there's a bit of loosen engine in the idea of confidence on behalf of the US dollar, and therefore commodities are climbing up very nicely. As you can see over here, we have a smooth, clean uptrend. Let's start to take a sequence. So that is my set goal. I'm starting with the first sequence, that is $10 investment, and I'm taking that for a call position as the dominant uptrend is definitely the directional movement that I'm expecting to receive. So right now I've got a trade. I took the gold at the bottom of the screen so that I'll be able to see the trade with the chart and take more trades in a row. So right now we've got 40 seconds until the position will complete its movement. We've invested $10. A profit on top of that $10 will be 75%, as we've described on the presentation. $7.5 profit. We've got 26 seconds to go. I wish that we will lose this trade, and then we'll be able to change the investment to $30. But we can see that the gold is climbing up. 13 seconds to go. 12, 11, 10. And if I lose, I'm already setting my system to the next item, to $30. Okay, so right now I'm ready to take the next trade. I see that I'm losing the trade and I'm taking the next trade in a row. This is the only way for me to actually follow the trend, to actually take advantage of where the market will move. If I wait a second, takes 10 seconds, I see traders do this mistake. They wait a bit, maybe the market will do this. It's not a question. We're talking about probability, we're talking about direction of movement. And in this case, if you'd like to succeed trading the sequence strategy, you'll have to take trades in a row as soon as the last position is completed, because then you'll miss the entire movement on the chart. Okay, so we've got 50 seconds for $30 investment. If I lose this trade, I'll have a minus $40. You see that the market is moving a bit against me, but it did the same thing for the past God knows when. So my assessment is to see a continuance. I'm already setting that for $100. It's completed, and I'm taking another trade for a call position immediately. Okay? And again, we're on the third trade. We've lost the $30 investment, the $10 investment, and right now we're invested on $100. That will deliver a 75%, meaning $75 as profit, minus the $40 that we lost on the two first trades, and that will be a bottom line of $35 as profit. Let's see, the market is correcting a bit higher, and we might see this trade in the green at the end of this sequence, this cycle specifically. 17 seconds, 16. Okay, and the market again is making a very strong downtrend, equivalent to what we saw until now. Let's wait a bit more, 3 seconds, and I'm already setting the goal for $300. Okay, and I took the $300 trade, knowing that at some point the market will make its correction and will complete its correction. The downtrend over here is the corrective pattern, and will continue higher, and based on that I know that I'm going to make very nice profits. We've already lost 3 items. We're on the 4th item. It's a very difficult for me to reach that kind of level usually, but let's wait and see. We've got 30 seconds to go. The market is approximately the same entry point as we had, and waiting for the expiry. If you've got questions, just type on the chat box. I'll be able to assist you. But I assume that you understand the concept. It's very easy to understand the logic behind it and to imply that. Okay, so we're going to lose the 4th item very nicely. Moving forward to the $1,000 investment, and I took the trade immediately as the last trade completed. It's the as you can see, it's the largest downtrend movement that we had since this entire movement began, and we're just waiting for a small correction. And again, a lot of traders out there, they look for a potential to return to the uptrend. I'm confident with that, but as you can see, having this additional downtrend over here, we're almost approaching the last top that we had on this uptrend. So if I'll cross that area, I might put this asset, the gold, aside and look for other areas to invest, as it's getting into a non-tradable structure. You know, as we said, when it's crossing the last peak, then we're putting it aside and moving forward to other items, and then we'll be able. Okay, so on $1,000, let's wait and see the validation of this asset. I want to show you an example of another thing. So I'm already on $3,000 investment. Let's cover one thing that happens every now and then when the market completes its movement accurately at the entry point. That is called I can't remember the name, but it's called it's practically the same value as you open the trade. It's a tie, sorry. So it defines a tie, and if we have a tie, we just open another trade with the same amount of investment. Okay, I want you to remember that. If you have a tie, let's say that you've traded right now on $1,000 and you've got a tie, you're not moving forward with the next item. You're opening a new trade with the same amount as you've got right now, as if this trade wasn't a part of your sequence. It's just amazing. The market is just staying on the same rate and not moving anywhere. So let's try to take the $10,000 investment. Amazing. It's just seeing this sequence. It happens just once in God knows when. Okay. We got another 75, 45, 44 minutes, 44 seconds, and the market indeed it's making a very large correction at the moment as we speak. But we know that the market will continue toward our prediction at some point, and then we'll make a very nice profit. In this case, $7,500 minus the loss that we've carried until now will deliver approximately $3,000 profit on top of our investment. It is the 1, 2, 3, 4, 5, 6, 7, 8 items. It's amazing, just amazing. That's the first time for me, such a large sequence, and what we're going to do next, because we don't have an amount like that on the strategy, we're going to take 3 $10,000 trades. Okay. And another thing that I'd like to cover that will help us to protect our investment is the definition of liquidity. Once we decide to trade, we need to define whether the market is expected to deliver large amount of liquidity, or it's just fluctuating and we have lower probability to produce a profitable trade. Let's complete this sequence and see, and I'll take another sequence after that. Obviously, I'm not going to trade the gold anymore as it's breaking its structure, and I don't want to continue doing that on this specific asset. The only thing that I'm waiting for is to close this as profit and to close this entire sequence and to move forward. We can see very nicely that indeed all the trades are in the green. And what I'm doing right now, I'm looking for another asset to trade with the same concept of a dominant uptrend or a dominant downtrend. So we've traded the gold. We can see that the euro versus the Japanese yen is not a suitable asset for us to trade on. Let's move forward to the Australian dollar versus the US dollar. That was an amazing sequence in terms of amounts. You have to understand that reaching a $30,000 investment in a sequence that we've started with $10, it's almost impossible. It's almost impossible, and the probability over here was huge in terms of toward our direction in terms of making profit. We can see that generally the market is very slow at the moment, not really forming a constant uptrend or a downtrend movement on a variety of assets. And it usually happens in times like this, before the elections, when we have announcements. For example, I gave this indication as an announcement that happened on at 12, and that delivered a lot of liquidity instantly, but then you can see that the market is not really moving anywhere. And in this case, we understand that traders out there, they do not take directional movement so easily as on a regular day. This is why it was so difficult to trade right now, because we know that traders, they're not following the trend at the moment on major scale as we were assuming, because of the election, because of the difficult time to trade, and the NFP tomorrow, which is another consideration when it comes down to investment on other markets, actually trading on currencies. The dollar versus the Swiss franc, we've got a bit of an uptrend over here very nicely, but again, it's not dominant as I'd like it to be. So let's move forward and look at other assets. I do hope that we will find another asset to trade on. Maybe the gold in front of the euro. The gold in front of the euro seems like a good one. It seems like the euro is more flexible than the US dollar. What do I mean by that? It's allowing the gold to express its strength in a smoother way than the dollar. So let's try to have a sequence over here as well. I'm starting with $10. Regardless of what is the hitting point, what is the initial point, just opening the trade, new sequence for $10 for a call position, as the dominant movement is an uptrend. You can see that we had a bit of a downtrend over here, but it did not penetrate the last peak over here, so I can refer to this asset as a dominant uptrend for a call position. And the trade is on the way. Again, we started the trade with $10, 7.3. We've got 73% on top of that investment, so it's $7.3 as profit. And we've got 27 seconds until the completion of this sequence. If we will profit out of this sequence, I'll open another one, but I want to move forward and show you an example of how we're lowering the risk factor of trading the sequence strategy. We've learned how to use it in terms of probability. We've learned how to read the chart recognition. You can see that right now we've completed a profitable $10 trade. So I'm opening a new sequence on $10, as if that's the first trade that I'm taking right now. So right now the market is moving a bit against me, already setting the amount on the next $30 for this next trade, and we'll have to wait and see whether it will be profitable. If it will be profitable, I'll close that. If not, then we'll move forward to complete another sequence to show you another example. But before that, after that, I'd like to go to the announcements calendar to see and to show you how we can define a proper time frame to a trade when we're not focused on specific time frame, on small time frame on the 60-second strategy, but we're looking at the wider aspect of what's going on right now in the market, how we can define whether the market is suitable for us to trade on that or not. We've got 4 more seconds. I'll complete in the green, I suppose, and that is it. Okay, so let's move forward, and I want to show you what I'm using and how we can define that. But before we'll go over the calendar, let's define the problem. We're saying that looking at 60-second instrument, we're focused on small time frame. It's not a bad thing once you trade the sequence, but you would like to understand what's going on generally right now in the market. And what do I mean by that? Announcements that comes out of countries along the trading day, they possess an amazing potential for long-term investments, an hour, daily trades, or even more than that, because the burst of liquidity is getting into the market because of announcements. But once we decide to trade 60-second strategy, we need to see that there's no interference on behalf of the announcement. And what do I mean by that? When I'm looking for long-term investments, I'm looking to use the liquidity of announcements. When I'm trading short-term trades, I want to put the interference of announcements aside. So I should trade time frames when I don't have an important announcement that can change the market significantly, especially with the sequence strategy method. So this is a calendar that you can look at on your end as well. It's called the forexfactory.com calendar. If you open the calendar up, you'll see this image where you can see the date of the announcements, the time when the announcement is released, and that's the time when you're expecting liquidity to move the charts, meaning traders to join the market to invest. Currency, what currency it has a connection to. The impact is how impactive it is on the chart. A red impact is highly impacting the market, is high impact expected. Orange is the medium impact expectation, and we don't have yellow over here, which is a very low impact expectation. So let's go to today's calendar. We can see the Thursday. As you can see at 3:30 p.m. GMT. Sorry, it's not GMT. Just 1 second. From time to time, pay attention to the clock, because the clock is showing you that you're not set on the right time frame. So going back to the calendar, you can see that right now it's we need to change the daylight saving. Regardless, let's put it aside. I want to show you just the calendar itself. So on the calendar, we've got the time, the date, when the announcement is coming out in terms of time and date. Let's move forward to today's calendar. We can see that we had a lot of announcements on behalf of the pound earlier today. We had, as I said during the webinar, we had an announcement on behalf of the pound. The Bank of England, Governor Carney has carried a speech, and obviously he defined the potential of interest rate and what we've got on behalf of Brexit, talking about different economy issues. In addition to that, we had unemployment claims in the United States. Unemployment claims, it means that how many new individuals were joining the unemployment sector in the United States, new ones. As you can see, we had 265,000 new unemployed in the United States just from this week, and in front of the prediction that was 257, it's higher, and therefore it's worse, it's bad for the currency, for the dollar. This is why we saw the gold climbing up very nicely, and this is why we saw the euro in front of the US dollar fluctuating roughly between very large areas, meaning that the larger liquidity was implied on this chart. So we can see that again, several other bad indications on behalf of the US dollar, and this is why we had this inconsistent movement on behalf of the gold, which is attached to the dollar. Gold is counterwise to the dollar. The dollar is gaining strength, the gold is losing strength, and vice versa. So this is exactly why we had that. Usually we've got a plain simple uptrend or downtrend that we can follow. You saw that on the second and third sequence that we took. We took 2 trades on $10. Both of them were profitable. And again, if you'll continue with this sequence strategy, you'll see pay attention that there are no announcements in the background that can deliver difference on the chart, because otherwise you can get caught in a section where you trade against yourself. So pay attention to announcements, see that you're not getting interfered by a specific market. For this example, unemployment claims was interfering our webinar. The next time that we've got an announcement is the non-manufacturing PMI on behalf of the US market at 3 p.m. It'll take some time until this announcement will come out. So right now, it's a good time for us to trade, just for the example. And that completes our session. Traders, I'd like to wish you all the best with your trades. Obviously, you'll have your brokers on your side. They'll be able to assist you with whatever you need. If you need more assistance, you can join my next webinars regarding the sequence strategy. And from here until then, wish you all the best, and obviously have a pleasant weekend. Cheers, all the best. Bye-bye.